This is probably the most important video that's going to be uploaded to my channel because this concept that we're going to talk about today, order flow, is the absolute core foundation. It is the pillar. It is at the center of everything I do, from bias to narrative to entry to risk management. It all comes back to order flow. So by the end of this video, you're going to know exactly what order flow is, how I use it, and how it helps you to really simplify and clear your charts, showing you the fair value gaps that you actually need to pay attention to and fair value gaps that you don't, and all other PD arrays that are irrelevant in your chart. So if you can understand order flow and how to find the proper order flow leg, which you will understand what I'm talking about soon, you are going to have a very simplistic, very focused looking chart, because this is going to help, like I just said, filter out all the irrelevant PD arrays, all the irrelevant levels you may have been using, so you can focus on the ones that matter. So let's get right into it. So what is order flow? In bullish order flow, you're going to have discount arrays being respected and premium arrays being disrespected. Now, what's a discount array and what's a premium array? Well, a discount array is simply any sort of level in price. Think it as a support level in which price can move higher from. So that's a discount array. It's a support level. So think you're bullish for value gaps. Think you're bullish order blocks. Think your swing lows. We can move higher off of that. Use that as support. So that's a discount array. So when we're in bullish order flow, those discount arrays are respected. Premium arrays are simply the opposite. They're resistance levels. If you're bullish, a resistance level would be a bearish for value gap. So those are your premium arrays. And in bullish order flow, those are going to be disrespected. Same thing with bearish order flow. Now we're pointing lower. We're looking for lower prices. So we want to see these premium arrays be respected, these resistance levels, these bearish for value gaps, these swing highs that we can sweep to then continue moving lower. And then discount arrays, we want to see those get disrespected. So your swing lows, your bullish for value gaps, we want to see that get ran through and disrespected. So this order flow can be seen through fair value gaps. So you need to have fair value gaps in order to have order flow. They go hand in hand. So let's break down what makes up an order flow leg. So a high probability price leg, which is an order flow leg. So those two are essentially the same term. Whenever you hear me say an order flow leg, I am referring to a high probability price leg. Now, what makes it high probability? You have to have a swing high, you have to have a swing low, and you need to have a fair value gap in between those 2 points. So the fair value gap is required. The fair value gap is what makes an order flow leg high probability. If there was no fair value gap in between those two swing points, in between the swing low and swing high, it is a low probability price leg and not an order flow leg. So when we're looking at an order flow leg, it's actually even higher probability if that order flow leg, if that fair value gap that is in that order flow leg was created off of a previous fair value gap. And this is what's known as confirmed order flow, where now you have a confirmed evidence where discount arrays, like we mentioned in the previous slide, are holding and premium arrays are being disrespected. So in this scenario, this high right here is a premium array. It got disrespected because we closed aggressively with a candle body above it, right? Think candlestick logic. This was taught in one of the recent videos. If you're not sure what that is, please do check that out because that is very important. That, alongside with order flow, are the most important concepts when it comes to my model. Order flow and candlestick logic. But back to this, we had a respect of this old order flow leg. So we're respecting a discount array, creating a new discount array right here, this new fair value gap. So just keep this in mind. When you have an order flow leg that came off of a previous order flow leg, that is an extremely high probability leg. So moving on, we always want to align ourselves with that higher time frame order flow, because the fair value gaps show you the intention of price. The fair value gaps are order flow. So if you notice that the higher time frame is in bullish order flow because you have bullish fair value gaps pointing higher, why would you short this? Why would you, for example, if we're looking at a daily chart right here, would you start looking for shorts to then play into the daily fair value gaps? You don't want to do that because you're trading counter trend. You're trading against current order flow. That immediately lowers your probabilities a ton, which is why I always mention that when you're trading external range to internal range liquidity, ERL to IRL, it is lower probability because you are trading counter trend, and the higher probability trades are always going to be in the direction of the order flow. So that's IRL to ERL, waiting for price to retrace into the fair value gap and then looking for longs out of that rather than looking for shorts into a daily fair value gap. Because yes, while this specific example on these slides did come down to that daily gap, let's say you're playing ERL to IRL, that is not always guaranteed, because in a bullish scenario, the most probable thing to happen is for price to continue being bullish and just to continue pushing higher. The retracement isn't guaranteed. If we get it, that's great. That gives us an opportunity to catch it. But it is not the highest probability thing to happen, because when you're bullish, price can just continue being bullish. So you shorting into an example, the daily fair value gap right here, playing ERL to IRL, it's lower probability. The retracement isn't guaranteed. Again, I'll keep hammering this. You're just trading against higher time frame order flow. Your highest probability setups are when you're in alignment, when your trades are in alignment with the higher time frame. So what do we do once we actually find that higher time frame order flow leg that we want to work with? Well, you're simply doing the same exact thing on the lower time frame, right? This is all about aligning order flow across all time frames. So for example, we have a daily fair value gap. We found a bullish daily order flow leg we can look for higher prices off of, right? Or an order flow leg is simply IRO to ERO. This goes back to the video I made a while back ago, the key to bias, IRO to ERO. All that is an order flow leg, right? We can view those as the same thing. So price comes into a daily IRO. You want to go down into the lower time frame and look for the same exact thing. You're looking for a new order flow leg off of the daily. So remember, time frame alignment off of a daily, we're looking for a 1 hour. So a new 1 hour order flow leg is created right here. Swing low, swing high with a fair value gap in between those. Now you have a high probability price leg that you can look for longs out of. This then creates another order flow leg. So now at this point, we have confirmed order flow because this order flow leg came off of a previous one. Whereas over here, that's just one order flow leg. So this is what we would call a shift in order flow, hence the name an impulse shift, which we talked about in one of the other videos, which is the entry model, an impulse shift, just the fair value gap displacing out of your higher time frame point of interest, which over here, we confirm it. We have a new order flow leg. This is actually another valid entry. Just playing this time frame aligned order flow leg and looking for longs out of that is also very valid. So if you want to take it a step further and look for a lower time frame entry, whereas in the previous slide we had a daily to 1 hour, let's say we want to enter inside that 1 hour, ignore that 4 hour, that should say 1 hour. Let's pretend that's a 1 hour fair value gap for the sake of this example making sense, okay? So we had that daily fair value gap in the previous slide with a 1 hour gap. You could just enter your swing trade off of that. That would be a summit model trade. But if you want to enter on an intraday trade, you can go inside that 1 hour as long as you're inside a kill zone and then do the same exact thing. Look for a new order flow leg on your properly aligned lower time frame. So for example, like I just mentioned, let's pretend that's a 1 hour fair value gap that we just saw for the daily. Inside of that 1 hour, you can go into the 5 minute and look for a 5 minute order flow leg. Remember, a 5 minute impulse shift, which we see right there with a swing low, swing high, fair value gap in the middle, and you can enter right there. That's your high probability price leg. So what you do, how you enter on these order flow legs, is you enter at the open of the fair value gap, stop loss goes at the swing low of the order flow leg, and you target a static 2R, and that is your trade setup. So what we did from the daily into the 1 hour into the 5 minute is simply look for the same exact thing, the order flow leg. And this order flow is fractal. It's a crucial part of every process in my trading, from the bias to the confirmation to the lower time frame entries. If you can learn to read order flow, you can learn to read price. I promise it's all you need. So let's now dive into some real chart examples and take a look. So here we are on GQ or on the monthly chart. Whenever you're looking at a chart for the first time, whether you're a scalper, whether you're an intraday trader, whether you're a swing trader, you're always looking at the monthly chart first, and you're looking for your order flow there, right? Whenever we're looking for order flow, we're doing it on a top-down perspective, where you start in the monthly, then you move on to the weekly, then you move on to the daily, then you move on to the 4 hour. You look for your order flow from the top down, not from the bottom up. You're always starting from the top down, because the higher the time frame, the stronger of an order flow leg that will be, the stronger of a magnet that fair value gap will act on price. So over here, we're starting on the monthly chart on GU. Now there's a lot of price action right here. So if you're new, if you're a beginner, it might be tough to understand what do I have to mark? Where and how do I even begin to find a bias? And that's where order flow comes in, because when we're looking at order flow, we're always focusing on the most recent legs. What I mean by that, the most recent order flow leg. So the most recent swing high to the most recent swing low with a fair value gap in the middle. The most recent and latest one. So what that means essentially for this chart right here, if I turn on my order flow indicator, which actually does that all for you, this is your order flow leg because it's the most recent high to most recent low with a fair value gap in the middle. So all that price action to the left, it's not something we have to really focus on and mark out all the million PD arrays that you see over there. You can really narrow down your focus to just this right here to give you a nice visual reference of what you should be really focusing on is that order flow leg right there. So do you see how order flow really simplifies a whole lot already in terms of where our eyes should be? Now, this is actually a very interesting example because in the slides, I did mention how ERL to IRL is technically lower probability. I'll give you a little insight here into my personal trading. The only time I look for ERL to IRL and actually trade it is when that is present on a monthly basis, because that gives us a lot of room to look for trades in this area right here, because you're going to have weekly and daily order flow pointing higher, which is strong enough to play. And I'll show you exactly what that looks like as we move further along in this example. But if we look at the monthly, this is a textbook example of external range liquidity to internal range liquidity, where we are sweeping this swing low right here, that external range, and we are now potentially moving back towards that IRL right there, seen by this larger spec candle. Again, this is candlestick logic. We went through this same example in the candlestick logic video from a few weeks back. So we expect this next candle to expand higher towards this fair value gap, and that can be a magnet for price. Now that we have that bias established, we're looking for higher prices. We want to go down a time frame, and yet again, we want to look for an order flow leg. So if we go to the weekly, you're going to find that currently we have this bearish weekly order flow leg. Remember, most recent swing high to recent swing low with a fair value gap in the middle. But we're sweeping that monthly swing low and we're disrespecting this monthly fair value gap, creating a new order flow leg higher right here. So order flow is what? It's shifted. Order flow is shifting right here from bearish to bullish for the first time. So once this candle closes, and I'll move forward in time, we have a new order flow leg. And do you see how the indicator automatically marks that? Automatically marks a monthly fair value gap. Super, super helpful right there. You don't have to even do it yourself. But we have that weekly fair value gap now, and we can look for higher prices off of that. And let's move forward in time, see if we do get that, when we get a IRL to ERL complete right there. We have a new expansion phase, which creates a new weekly fair value gap. So what is that? This is your new order flow leg. So that is the area you're focusing on for longs. Again, just for reference, all of this pretty much becomes stuff you don't even have to focus on, because now this weekly IRL to ERL is your main focus. If price comes to that weekly fair value gap, this right here is all you really need to focus on. This boundary from that weekly fair value gap to that high, because this is the most recent order flow leg. It's the most important area, the most important leg, the most important PD arrays are going to be found inside of that leg. So now that we have that higher time frame context, we have that higher time frame order flow leg, we wait for price to retrace into that fair value gap. So there it is, prices come into that weekly fair value gap, and we're going to do the same exact thing we did on the higher time frame. We're going to look for the most recent order flow leg created off of that weekly. So remember, most recent swing high to recent swing low. And right there, you're getting a swing low, you're getting a fair value gap, we're about to create that high, boom. You get your 4-hour order flow leg right there. And if you're trading the summit model, the swing model, that is an entry. Stop loss goes at the swing low of the order flow leg, entry at the IRL of the order flow leg, and you target a static 2R right there. And that's your trade. We look for the order flow legs on the higher time frames all the way down to the entry right here. And let's just see how that played out. And there is your 2R. There is a new 4-hour fair value gap created, new order flow leg there. Eventually, we do complete that weekly context right there. And it is deleted. Indicator did delete that because it's an irrelevant order flow leg anymore, right? Once context is complete, once this IRL delivers, it is no longer relevant. This fair value gap is no longer relevant. So we get a new weekly expansion candle Let's see if that creates a new weekly order flow leg, because now what? This is now your weekly order flow leg, and we are actually disrespecting this monthly fair value gap. We have this new weekly order flow leg slicing right through that monthly fair value gap. It's not showing any sort of respect to want to push lower. So we can actually look at this weekly fair value gap right here, this weekly order flow leg pointing higher, and look for longs out of that. So this is actually quite an interesting example, because this weekly fair value gap, I remember it while it was playing live, it was weak at the time. So if we take a look at euro, this was the stronger asset. So remember, when we're looking at trades, we always want to trade the relatively stronger asset. And if we look at euro, this right here was the relatively stronger pair between euro and GBP when it came time to actually looking for longs out of that same weekly fair value gap. Because here's that same weekly fair value gap that we saw on GU right here on euro. And if we take a look at how euro played out, we see that impulse shift right there. So let me move back in time. There is that 4-hour impulse shift. That is already enough entry for your euro trade. Let me turn on this indicator right here, actually force the monthly bullish bias so we can get that weekly fair value gap getting shown. I can delete that indicator, will show that up automatically. And let me also pull up the GU example so you can see why this would have been the setup over something like GU, for example, because they were setting up at the same time off of that weekly fair value gap. So this right here is that 4-hour impulse shift. Remember, your recent order flow leg off of your higher time frame order flow leg, which is right here. That's entry. That's an entry already for a swing trade. Where if we look at GU, it was a lot weaker. In fact, while we were expanding right here, and again, you can see that if you look at the right, the dashed lines are at the same relevant levels. We were just consolidating on GU. While EU was creating a fair value gap right here, GU was just consolidating. So clearly it was weaker. Clearly it lacked some of that energy. And for that reason, I looked at EU as the trade setup, and I took an entry right here, placed my stop loss right here. Again, there's an alternative stop loss when you're using order flow legs. You can either put it at the actual order flow leg low or the bodies of that level. All right. And then I targeted a 2R. So for that reason, I went with EU instead of GU right here, regardless of the SMT we saw right here. Again, where GU did not come into that weekly gap, EU did. So that's why I chose EU. And let's see how this played out. So using the weekly order flow leg into the 4-hour order flow leg, I will say this was a horrible delivery. I remember this very clearly. One of the most insane comebacks for one of my trades. You're going to see just how close it got to my stop loss without tagging me out, surprisingly. And it's going to run right here for 2R, new 4-hour order flow leg. And eventually that holds and completes context right there. Now, taking a step back again on euro, the reason I always say you want to start looking for your order flow from the top down, from the monthly, is because if you just pull up the 4-hour and you just say the 4-hour is my higher time frame because I'm a scalper, I don't even need to look at the monthly. Well, you're going to be short-sighted because you're going to see this 4-hour fair value gap that came out of this 4-hour fair value gap that came out of this 4-hour fair value gap, and you're going to be convinced that the 4 hours is an extremely bearish order flow, and you're going to look for shorts in here. Listen, that is where a lot of traders lose by not checking the higher time frame. Because if we just turn on the order flow indicator right here, we'll see that price is coming into a weekly fair value gap, and this right here is low probability. In fact, it's something we expect to get ran through, create a new 4-hour fair value gap like we just saw. That's an entry, and then we look long right there. So stop getting blindsided by being so focused on the lower time frames. No matter what kind of trader you are, always look at the higher time frames when you're looking for order flow. So here we are on the NZD/JPY monthly chart. Remember, when you're trying to answer the question of what's my bias, am I bullish, am I bearish, what direction should I be trading in, what order flow is telling me, is it pointing higher, is it pointing lower, you want to start on the monthly chart. And this monthly order flow is clearly pointing lower. So we had this monthly fair value gap, got respected. We actually swept this monthly swing high inside that fair value gap, created a new fair value gap here. So we created a new order flow leg, right? The new order flow leg at that moment in time was from that swing high to that swing low. We completed context right there. But we still haven't completed this overall context to this ERL. So we can still have that bearish bias. And since we don't have any monthly context anymore, do we have weekly context? And we don't. So we don't have monthly context. We don't have weekly context. We can dive into the daily. Do we have daily context? And what I mean by context is, do we have a daily order flow leg to work with? And if we look at the daily, we do, where we have this swing low and we have this swing high. So I'm going to mark them out. Well, actually, I don't need to. The indicator just did it for me. We have this daily fair value gap right here that if I move forward in price, it will automatically mark that out right there. So that right there was our context area. That was our order flow leg to look for trades within. So inside that daily, using proper time frame alignment, we would have gone down into the 1 hour. And inside that 1 hour, we're looking for, again, another order flow leg to work with, the most recent one. So if we take a look back at what happened over here, we did tap into the daily fair value gap, rejected, but we never got a 1 hour order flow leg lower. There is not a single fair value gap in this price leg right here. So that means there's no order flow leg to work with. No fair value gap, no order flow, no trade. So there was no entry. There was no reason to have taken a loss on any of this down movement right here. Price comes back up into this daily fair value gap, sweeps that liquidity pool right there. And then we have another opportunity to look for a new order flow leg, a new impulse shift. So let's see what happens right here. We get a new 1 hour order flow leg. Remember the most recent swing high to recent swing low. I know I've said this so many times in this video, but it's very important to understand. It's always the most recent leg. And we get a new 1 hour fair value gap right there. That's your entry. Off of the daily, go into the 1 hour, look for your 1 hour fair value gap, stop loss at the order flow leg high, target a static 2R, and that's your trade setup. As simple as that. Let's see how that plays out. Beautiful. And that was that setup right there, completing that daily context, offering a very nice 2R. So of course, there is a few more things that go into order flow, which we discuss every single day, every single week inside the free Discord. So if you're not in there yet, join. The link is down below in the description. And we will cover some more of the stuff as well in the following videos to come this year. Got a lot of things planned. And if you're interested in the order flow indicator, which does all this for you, all the stuff we covered in this video, this indicator, the order flow indicator right here, does all automatically for you and marks out all the relevant fair value gaps, all the correct ones, all the right order flow legs, alongside with the ERL, the overlapping level, and something very special, we have SMT coming as well, soon to be added to that order flow indicator. And yeah, that's going to be huge. Alongside that order flow indicator, if you decide to use my indicators, you also get the navigator indicator, which also does this right here. It'll show you your higher time frame current order flow over here, so you can see the order flow leg you're working with. So for example, this right here on gold, this 4 hour price action coming off of this weekly IRL right here. So you can see that you can view your higher time frame order flow leg while you're on the lower time frame. I think that's super damn neat. That alongside the risk manager indicator right here, which automatically calculates your position size for you and automatically alerts you when it's time to trail your stop based on order flow legs, which is going to be another video we do this year. How do I trail stops? That alongside the entry alert indicator, it's all one package. All of this comes together alongside the Discord bot and a private chat room for all indicator members with exclusive insights from myself. It's insane. It's insane the amount of stuff you get. I know it sounds like I'm plugging, but it is a plug, but this is definitely a tool in which I really think will really streamline your trading, save you a lot of time, and be beneficial. All right, I honestly mean that. But back to this entry alert indicator, this is how you use it. You simply mark your IRL, you select what entry functions you want, and you want to make sure that's a 4 hour, right? Because we're marking out that 4 hour. And then inside of that, if price retraces, which I really don't think so, it says likely being a bag. If it did, you would get your alert off of that, your 5 minute chains, your 5 minute change in state of delivery, 15 minute change in state of delivery, or your 15-minute fair value gaps off of that. And you can do that for any time frame IRL right there, so you never miss a trade again. So if you're interested in any of these tools right here, the link will be in the description for that. There is a 30% off discount code for your first month, so you can try them at a much lower cost than normal. The code for that is APR25. Again, the link is in the description for that. So I hope you guys found this video insightful. You learned something new today. If you did, I would greatly appreciate a like, comment, subscription, and that would really help me know that you guys are finding use in these videos and encourage me to keep on making more. So I'll see you guys in the next one. Much love. Peace out.